Hey everyone, welcome back to the Living in Maryland channel where we discuss all things living here in the great state of Maryland. And today we are already sitting at November 11th, which is crazy. So the day of making this video, making our way through November, heading towards Thanksgiving, and just wanted to give everyone a quick update on how our real estate market is looking here in Central Maryland. So just wanted to jump right into it. First thing I wanted to touch on is just where interest rates are currently at. So we're looking at a 30-year fixed conventional mortgage today, national average right around 6.375. So this is a 30-year conventional mortgage. You've got your government loans, which is your VA and FHA, right around 6 1/8, so 6.125. Your government loans are always a little lower than conventional loans for whatever reason. So you'll always kind of notice that, maybe a third to a quarter of a point difference between your conventional and your government loan. So that's where we're sitting at right now. One other thing I wanted to mention is I was actually talking with someone yesterday. They were asking me, hey, what do you think the chances of rates going down, low again into the 3 range? So this was just something, of course, nobody really knows, but just wanted to kind of share my thoughts on that. So when I got asked that, the first thing that comes to mind is that during, our COVID, after COVID hit in 2020, we saw the lowest rates that we've seen really ever when it comes to your mortgages here in the States. So we saw those drop into the low 3s, even like your VA and government loans were in like the low to mid 2s at the peak of the low mortgage rates. The reason for that, at least from what the research that I have done, is because the Federal Reserve during that time was purchasing billions and billions and billions of dollars of mortgage-backed securities. They were the biggest buyer during that time, driving those rates down. When rates started going up, the Federal Reserve stepped out. They said we're no longer going to be purchasing mortgage-backed securities. I'm pretty sure that was the only time that they've ever done that. So that was just like a thing to step in and just kind of keep affordability during the COVID, crisis, so to speak. So once they stopped doing that, once they stepped out and stopped being a buyer of mortgage-backed securities, now it fell back onto traditional investors, which was, your pension funds, other countries, investors around the country and around the globe, having to purchase mortgage-backed securities. So when there's less buyers purchasing mortgage-backed securities, they have to raise the rates to make it more attractive for investors to purchase mortgage-backed securities. For that reason, the Federal Reserve has said they're not going to be doing, purchasing anymore, I believe. So I don't see them doing that again anytime soon. Again, that was really the only time that we've ever seen that, is during that low time, right after COVID, was the Federal Reserve buying that much, mortgage-backed securities. So unless they step in and become a major buyer in mortgage-backed securities again, I don't really see interest rates, plummeting that low again. Of course, anything can happen. Who knows what the future holds? But just wanted to share that thought. So for me, as a realtor, as a future, buyer and investor in real estate in the future as well, I'm planning on rates, maybe going down into the 5s, maybe high 4s if. But I don't see them dropping down significantly into the 3s or 2 range or anything like that anytime soon. So we'll see. And of course, over the last couple of years, we've been, averaging around the 7% range. So right now we are below, where we've seen rates, peak. We saw them peak at 8, but they've been really hovering around 7 over the last 24 months. So we're doing okay on that front. I do see them going down a little bit into the near term future, but unfortunately, unless something crazy happens, it seems like them dropping significantly, especially well into the 4s and into the 3s. It seems unlikely, but again, of course, anything is possible. All right, next, I wanted to kind of go over quickly our inventory here in Central Maryland. So we are still seeing relatively low inventory, although at the state level, we're seeing about 2.7 months of inventory. So what this is our inventory is our absorption rate in real estate. It's how we gauge supply and demand and kind of where the market's at demand-wise, or supply and demand-wise. So historically, 0 to 3 months is going to be a seller's market. That means that there's not a whole lot of homes in the marketplace. And if there's, relative to demand, and that if all things being equal, all homes on the marketplace would basically be, go under contract and sell within 3 months. So that's what if you have 3 months of inventory, that's what that would mean. So currently we're at 2.7 months, but the trend has been, we've been making our way up to 2.7 So, if trends continue, probably in the next 6 months, we could be solidly in a neutral market, which is 3 to 6 months, which means we have pretty steady demand and supply. If trends continue beyond that, so 3 to 6 months is where you see more of a normal neutral market. When you get 6 and over months of inventory, that's where you start seeing a buyer's market, and of course, the higher the months of inventory is going to be more of a severe buyer's market. So we'll see what happens, but we have been steadily making our way kind of out of a seller's market and making our way towards a neutral market for the last 12 months now or so. We've been seeing that kind of steadily month over month. So we'll see kind of where we're at. But if recent trends continue, I'm guessing in that next 6 to 9 months, we'll probably be pretty solidly in a more neutral market, which is again in that 3 to 6 month range. So we'll see what happens, but that's where we're at today. All right, next thing that I'm really paying attention to is our days on market. This is another thing that has been steadily increasing over the last year or two. So we're seeing in kind of the more Baltimore metro counties, so you got Howard County, Anne Arundel County, Baltimore County, we're seeing a median number of days on market right around 29 to 30 days on the market. Our more DC metro counties, which is going to be PG County, Prince George's County, and Montgomery County, we're sitting closer to 35 days on the market. So, and we've been seeing that steadily increase. So that's it's kind of reaffirming the slight increase in inventory that we've been seeing, making our way heading towards a more neutral market. So these are things that are coinciding and overlapping and kind of making sense. So they're kind of supporting each other. The other thing that we've mentioned the increase in inventory. So just to give you a little more specific, so we got Howard County sitting right around 500 total homes, active homes on the market right now. We've got Anne Arundel County around 1,000 and Baltimore County around 1,500. Our DC metro counties, so you got PG County at a little over 2,000 active homes on the market, Montgomery County about 1,900. So we are seeing in the DC metro more options, more active homes on the market. So if you really want if you're a buyer in the marketplace right now and you want to see the most options, Prince George's County is definitely going to have the most. Now, it's the biggest county population wise, land mass wise, and I think even the 2,000 active homes on the market is not necessarily a true reflection. I think that's a conservative number, because in Prince George's County, we also see the most amount of new construction. So if you're open to new construction, the 2,000 is not going to factor in all of the available new construction. So in Howard County, very little, and Arundel County, not nearly as much as PG County, as well. So if you're really looking to maximize options and you want more leverage as a buyer, PG County, Prince George's County is definitely something to look into. And again, Montgomery County, been slowing down. The shutdown hopefully it looks like they're going to figure that out here soon, any day now. So maybe that's going to stabilize the more DC metro markets, but that's definitely had an impact here in Central Maryland. So a lot of things going on in the marketplace that are kind of leading to these numbers here that we're talking about. All right, and lastly, just wanted to give some advice to those of you out there, if you're looking for it, if you're a buyer or a seller, what are some things to keep in mind? Maybe what's some advice going into being a buyer or seller in today's Central Maryland real estate market? So if you're a seller, I continue to just advise sellers right now that it is a very, very price sensitive market. If you go on the market and you're priced right, you're still probably looking at seeing 1 to 3 or 4 offers on a home if you're priced right for the location, condition, and square footage that you're in, comparable to similar homes in the area that have recently sold. Also, paying very close attention to active homes on the market and under contract homes on the market. That is going to be more telling of your price point in today's market than something that has sold 3 to 6 months ago. So our market is it's changing. It doesn't change overnight, but it does feel like there's changes happening, and that it is happening a little more quickly than we're used to seeing. So just being aware that we're in a very, very price sensitive market. So doing extreme due diligence on pricing and trying your best to get that right your first day on the market, because the reality is that your best offer is probably coming in the first 7 to 10 days. demand can like fall. It's weird, you know, on some of these listings that we're seeing is demand can fall off a cliff very quickly after the first weekend. If you're not priced right, it can stall out to almost nothing, like going like a week, 7 to 10 days without a single showing request. So demand has really, it's really taken a step back in the last 6 to 9 months. So just being very aware of that if you're a seller. Now, if you're a buyer, it's still technically a seller's market, although we're making our way quickly, as I mentioned, into a neutral market. So you have more options. You've got a little more of a level playing field as a buyer in today's market. So just kind of having a game plan going in. One, knowing that priced right homes still can sell very quickly. So as a buyer, you want to try to stay away from the mindset of, oh, it'll be there in a week or two or whatever. So chances are that it can still sell quickly if it's priced right. So you still want to be kind of ready to go if you're a buyer looking for a very specific property, but also knowing that homes are sitting longer and that there's more opportunity for more neutral terms and conditions and a little more negotiation on homes that don't sell in the first weekend. So we are seeing again a lot more of those neutral terms. 18 to 24 months ago, we were still having a lot of those conversations around multiple offers. What does it look like to be competitive and things of that nature? But we have seen that, really settle down. So if you're a buyer and a seller stepping into the marketplace, those are some things to keep in mind. As always, if you are looking to purchase a home or sell a home in the Maryland area and you would like to have a conversation about what that looks like, and how we can best assist you in that process, feel free to reach out however you are most comfortable, and we would love to have a conversation with you. All right, everyone, thanks so much for joining us in this video today, and we will see you at the next video.